Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the break of 97 put the sellers in short-term control, leading to a test of the 88.75 to 2091 zone. At this point, heading into the open, we know that the sell side has been dominant in the overnight session, but that doesn't mean that our overall bias is going to be bearish. So the overnight bias, we know, has been bearish, but responsive buyers can still be active at support, especially at the 84 quarter to 86 quarter zone, and even at the 88.75 to 91 pre-market support. So we're not heading into the open with a very bearish view. Our short-term bias is going to be neutral, with the idea that the buy side can still step in at pre-market support, or in the event of a break of pre-market support, they can still be active at the initial support zone. And in the event of extreme selling and range expansion, perhaps we go down into 78 to 79.5, which is the high volume node of the balance that we broke out from, and that would be another spot where buyers could be active. But right now, heading into the open, the expectation is not for the market to trend lower, and there is still potential for responsive buyers to be active for a move back up into the 97 quarter to 99 quarter initial resistance zone. And then if we can take that zone out, we can go up and test 2103 to 2105 quarter and fill the gap. So our bias is going to be fairly neutral here. We are open to a little bit of continuation lower in the event that there's a lot of downside momentum and follow through on the downside in the other markets as well. But we're not going to be overly bearish today. And the only time that we would be more bearish is if in real time we were seeing a situation that was looking like a trend down day, where the advanced decline was not only at a very negative level, but trending lower, and the NYSE tick was purely holding below zero, and the other markets were really liquidating as well. So if off the open, we see some signs that support the bearish view, then we'll have to adapt and adjust accordingly. But looking at the bigger picture, it seems very unlikely that we're going to get a trend down day. Most likely, responsive buyers are going to be active, and we're probably going to continue balancing within a range, and a retest of 97 quarter or 99 quarter is very achievable today. And in the event that we actually extend the range lower and go down into the 84 quarter to 86 quarter zone, or even a little bit below that, buyers can still step in over there, and then ES can go right back up into the 91 to 93 area, essentially the small balance that the market developed here in the overnight session. So in either of those scenarios, we can expect responsive buyers to step in on first test of support. And for those reasons, we have to be careful and cautious on the short side, and especially entering short at very aggressive location, because there may not be much left on the downside. So you don't want to be so late to the move. If anyone shorted overnight on the breakdown of 97 to 2100, or even ahead of that, that would be one thing. There's enough risk reward down into the 88.75 to 91 zone. But at this point, initiating a new short from the 89.90 area is a bit more risky, and the reward potential is questionable. So it doesn't mean that we can't go down and test 84 quarter to 86 quarter, but the reward potential is quite questionable here. So that's really the view heading into the open. Overnight, sell side in control, but the other markets are close to support. ES has some decent support below as well, especially down at that 78 to 79 half high volume node, and the initial support is, like I said, another good spot where responsive buyers can be active. So for those reasons, we are going to have a neutral bias on the day time frame, expecting the market to be fairly balanced today heading into the weekend. So those are the main ideas. Let's see if the buy side can step in either at pre-market support or initial support, and we'll take it from there.